Is the stock market prepared for the news coming out today? And the fear and greed index is still out of fear territory. Is it about to swing back into fear, or are we going to see it moving back towards greedy territory? Now we look at the economic calendar for today. 10:30 a.m. we have crude oil inventory numbers. 2 p.m. we have FOMC meeting minutes, but what is not on the economic calendar could be what really rattles the market this morning. And that is when we come and look at the coming job revisions likely to show economy is weaker than reported. And we got to ask ourselves this question. If this is the case and they do revise that the jobs numbers is anywhere from 600,000 to 1 million less than what's been reported, is the market going to have a hissy fit? And will we see stocks starting to come tumbling lower? Let's not forget, we have several gaps on this run up that still need to come back and potentially get tested. We also look over here to the right. We can see the market is right near the high volume area, at least when we're talking about the NASDAQ. We come over and look at the diamonds, and we can see yesterday we had a candle of indecision. We basically opened and closed in the same area where the market probed a little bit higher, probed a little bit lower, and that was all she wrote. MACD indicator still has a bullish separation of the lines, but as we're now back up towards where the recent highs were, where we came tumbling lower, the MACD indicator is at a much lower point, which also would suggest that maybe we start to get a little bit of a pullback, maybe even coming all the way down here, fill in the gaps. We take a look at the Russell 2000, the small caps not holding up so well. And in pre-market, we're up 88 cents on the session. Now with the small caps, we saw this gap from that nasty week we had in the market up here, somewhere around 216.59. And let's not forget, we have a gap from last week at about 206.71, which still needs to come back and get filled. Now we come over and look at some of the overseas markets. Last night, the Nikkei was down 111 points. The HSI was down 120 points. Then we come over and look at the DAX this morning. The DAX in pre-market is actually up roughly 0.5%. So is the DAX basically projecting that the US markets are also going to be higher this morning? We come over and look at the dollar index. What do we see? Dollar index has absolutely been falling off a cliff. And in pre-market, we see the dollar index is up 55 cents on the session. Now, with the dollar index trying to firm up a little bit this morning, what does that mean out here for gold? Well, yesterday we saw gold had, rocketed up, did not hit our ABC projection, and then closed down lower. So now we have a selling tail on top of that candle. Will we come back today and potentially test that candle? Or are we going to start to pull back and basically not make it all the way up here towards the ABC projection? We come over this morning, take a look at crude oil. Crude oil is very critical. It must hold 72.31. We start violating that level, we're probably coming all the way back down towards 70.48. Now, if indeed crude oil can firm up here and actually hold that level, then we have the potential for an A to B equals C to D pattern on the way up. And that would go something like this. A to B equals C to D. That gives us a price projection up here about 80.95. Now, I pose a question for you guys real quick. Has crude oil been coming down because we have a demand issue, aka economy slowing down, or is there some other factor? You guys let me know what you think in the comment section down below. Now, as we jump over and we take a look at the QQQs real quick, yesterday we had a candle of indecision, basically a doji candle. We opened and closed very close to the same price. We probed a little bit higher, probed a little bit lower, and on the daily chart, the MACD indicator still has a very bullish separation of the two lines. However, as we start to come up here, we got to be mindful. If we start breaking above the 78.6 level, we're probably going to make our way all the way up here towards new all-time highs. As we look out here on the 4-hour chart, what do we see? Well, it's been chugga, but now we're starting to see the MACD indicator starting to get a roll effect. It's still in the early stages of what could be a weakening of the MACD indicator. Then out here on the 1-hour chart, what do we see? Well, as prices have been making new daily highs, we see the MACD indicator just simply not confirming those new highs, meaning the MACD indicator is not making higher highs. Then when we look out here on the 30-minute profiles, we can also see the MACD indicator on this chart is we have huge divergence setting up, but I want to caution you guys on something. If we are still hovering near this upper level of this move up that we've had, and the MACD indicator gets down towards the zero line, that could be nothing more than a recharge point for the market to go screaming up higher once again. Now, as we come over and look at the volume profile, I want to remind you guys, yesterday was a D as in dog shape profile, which indicates that today is likely going to be a breakout or breakdown from this pattern. If we look at value area high, that comes in at about 481.51. The point of control comes in about 480.68. Value area low will come in at 479.98. So when we look at this, we can see right now we are trading just above where the point of control is. And here's what I'm going to say. We want to be very mindful today. whichever way we break first, maybe nothing more than a trap being set and the market goes the other way. So if we break out to the upside today, watch out. That could be nothing more than a trap for the market to come back down. If we break to the downside, that could also be nothing more than a trap and the market's going to get bid right back up. Now, if we do start falling lower, keep in mind, if you're looking at this for multiple day targets, we do have gap support down here at about 468.45. Then the gap being filled at 462.82. But wait, there's more, because when we scroll back, we have a gap, basically 2 days before that as well. And to go ahead and fill that gap, we'd have to come all the way down towards 451.58. Now, I do want to come back over on the daily chart real quick, and we can see the Fibonacci retracement that we've done on the way up. But what about if we start pulling back to the downside? We want to measure from swing low all the way up here to the swing high. Now, if we break this swing high, obviously we'll have to adjust this fib level, but I want you guys to pay very close attention. The 38% level would be enough to go ahead and fill the first gap, but the 50% level would get us very close to filling this secondary gap. Now, 38% retracement is considered a very minor retracement in what could still be a very bullish phase of the market. So we need to see, when the market starts to turn, do the buyers come in and support the market, or do we just simply fall off a cliff? I want to make everybody aware, Apex having a 71% sale off all their valuation accounts, past in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, as we come over and look at the futures markets real quick, notice we're having a hard time coming all the way up to 19,962.50. This is a previously weekly untested point of control. And you can see that also correlates on the composite profile, where we had a decent amount of volume as well. But let's not forget, from last week, we have the minus development area within the profile. So if things start to get dicey, that could be an area where the market is going to want to come back and retrace down towards. Also, we have that weekly untested value area high, which comes in at a price point of 19,424.00. Now, I do want to do one more thing on this chart. I want to grab my Fibonacci retracement, measure from this last leg up to the current high. Notice the 38% retracement would bring us very close to last week's point of control. And remember, that is still considered a minor retracement in what could still be a very bullish move in this market. Then we come out here and we look at the daily profiles, and we've been talking about this at the nightly streams. But if you look right over here, 19,692.50 is that untested, which came in on August 19th. And yesterday we did not come back and test that level, which really makes it today is highly probable that we're going to make a flush down towards that area and test it. Now, if we do start breaking below that untested value area high, then I would want to look for a move all the way down here towards 19,609.00, which is also the point of control from that very same day. Now, when we look at the volume profile levels, last night we came down and we tested value area low, we popped back up, and we did not make it all the way up here towards value area high. So do we simply start rolling back over, and the overnight volume profile levels are going to give us some more insight into that. Now, as we come over and look at the SPY real quick, we can see yesterday we have more of a spinning top type of candle, but basically the same as a doji, a candle of indecision. We open and close roughly in the same area, and we have a wick on the bottom, a wick on the top of that candle. The MACD indicator showing no signs of weakening out here on the daily chart. On the 4-hour chart, though, we can start to see we're starting to get a roll effect. However, we're not at the point to where the MACD indicators are getting ready to cross just yet. On the 1-hour chart, though, we can see we've already had a bearish cross of the MACD indicator. And as prices come up here, making new daily highs, we're not seeing the MACD indicator making new highs. That's letting us know that momentum to the upside is starting to weaken. Then out here on the 30-minute chart, notice, all right, we do have 2 gaps down here that still need to come back and get filled at some point. But as we look at today's volume profile levels we'll be dealing with, we have value area high coming in at 559.29. The point of control will come in at 558.64, and value area low will come in at about 558.19. Now, as you look at this, you can see right now in pre-market, we're actually trading above yesterday's value area high. So this is going to be very simple. If we start coming back down below it, I want to target the point of control. I want to target value area low. I want to target the lows from yesterday. Then I want to hold out for a multiple day target down here towards gap support at about 548.88. And then the gap all the way down here being filled at about 543.75. Anything below that, then I would want to target the next gap at about 536.36, and then the gap being filled at 533.24. just note that both of these gaps, I don't see likely that we come down and fill it today. If you're looking to target those levels, I think that would be a multiple day event. Then as we come over and look at the futures markets, we just barely missed hitting this other untested point of control at 5648.50. There's still plenty of time out here this morning where you can see the market making it right up towards that level before ultimately coming back lower. Keep in mind, from last week, we do have a huge minus development area within the profile, but we need to make it, basically past some of this high volume area first. We have a little bit of high volume on the composite at about 55.58, then down here towards 55.47, then down here towards 55.31. Anything below that, that's when I'm then going to start to target the minus development area within last week's volume profile, which we can also see out here on the daily chart. We zoom this chart out, you can see it right here on the daily profiles. Here's that minus development area. I'm gonna go ahead and incorporate this whole area as the minus development area. And that's gonna be right here from the swing point, somewhere in the ballpark of 54.92. Now I wanna go ahead and move this up a little bit to about 55.12. I had been looking previously to about 55.03, 55.04, but now re-looking at this, re-examining it, I actually wanna use this whole zone all the way up here to about 55.13. So this would be a multiple day, more likely than not, a multiple day runner target for the market to make it down towards that area. Now, if we're looking at the volume profiles, one thing that should be capturing your attention is the fact that we have this untested point of control down here at 5601.25. Are we going to make it today, or are we going to go ahead and breach above yesterday's high? Now we look at value area high from yesterday and notice what we did last night. Last night we have went above that price point and currently we are just below it. So if we are below yesterday's value area high, I want to be on the sell side of the market, targeting the point of control, yesterday's value area low, this point of control from the prior day. Anything below that price point, then I'm really looking for a multiple day event where we can make it all the way down to that minus development area that we just drew out just moments ago. Now, as we come over and look at the overnight volume profile levels real quick, notice one thing. The overnight range for the NASDAQ has only been 78 points. That's a very tight overnight range from high to low. Now, if we currently look, we can see that value area high is going to come in at a price point of 19,838.00. The point of control is going to be 19,825.00. Value area low is going to be 19,797.50. So just note, if we start breaking back below value area low, I want to target the point of control. I want to target the overnight value area low. I want to target yesterday's value area low, but then my attention turns to that untested value area high at 19,692.50. Anything below that, then my attention will turn down towards the point of control at 19,609. But note, if we start breaking below value area low and we start coming back up, I then need to be back on the buy side of the markets. Then as we come over and look at the S&P 500, what do we see? Overnight range, 16.5 points. And I think that's relatively close to what we had yesterday. Yesterday we had a 16-point range. So today we have, another half points, 2 more ticks. Now, when we look at value area high, that's going to come in at 5628.25. The point of control will be 5623.75. Value area low will come in at 5619.75. Well, we can see that we've already been above and we are currently above the overnight value area high. So if we start coming back down below it, I want to target the point of control. I want to target value area low, but then I also want to go ahead and look and say, all right, anything below that price point, I then want to target yesterday's value area low and then this untested point of control at 5601.25. If you're real and feeling froggy, let's not forget that minus development way down lower that we talked about earlier, which I don't think will come back and get tested today, but who knows, crazier things have happened. Now, another thing I want to mention as well is when we zoom up and look at the last two, when we look at yesterday's volume profile, if we do get below 5629.50, then we could actually use the overnight value area high as a quick little scalp target number 1. Now, if you're tired of your stop losses being hunted, watch this video right here.